Hey, what is going on, guys? This is Daniel, one half of the Kwak Brothers. Welcome to another Friday live show. Guys, it's Friday, TGIF.
Yeah.
Woo!
Yes,
Good
sir.
stuff. And I got one of my good friends, one of my best friends, Mr. Joe Montiel over here, man.
The Sam Kwak replacement.
That's
just
right, the Sam Kwak replacement.
taller.
The taller, the thicker version, the better looking version. No, I'm not going to say that.
I'm not watching this right now.
Yeah, I'm not going to do my. And then we got the John Krasinski of the Kwak Brothers. We got Mr. Nick Redding.
Hello, everybody. I don't have a hat on today.
No hat. This is like Kenny without a hood in South Park. This is great. But welcome, guys. Welcome to the Friday live show. Please put your questions down below. Anything that, especially with real estate investing, housing market, and we're going to talk about some fun stuff today. We're going to talk about cryptocurrency. We're going to talk about the Biden's minimum wage and how that affects small business, how it affects our economy. We're going to talk a little bit about the forbearance that's been extended by the FHFA. We're going to talk about that today. We're going to talk about the housing market. And we're going to talk about some pretty interesting things going on in our world today.
Like the Dave Ramsey. Dave Ramsey was
What is up with
yesterday.
Dave Ramsey? What's going on with Dave Ramsey, guys? Fill me in. I don't know too much about this situation. I try not to pay attention, but of course, this is the world we live in. But what happened? What happened with Dave Ramsey?
And let us know down in the comments, too. I always like seeing where are you guys coming from. Put down the state, put down the city. Let us know, where are you guys
at? What state, city were you guys in? And what do you guys think? Fill me in. For those of you guys watching right now, what happened with Dave Ramsey? But I want the two of you guys to fill me in first.
Yeah. So basically, he was on Fox News, the great Fox News yesterday, and they were asking him questions on the, what he thinks on the stimulus package. They asked him specifically, and I think what people are upset about is the way that he responded. Okay. Basically saying that he doesn't believe in the stimulus. Okay. And I think what got people upset, and I wish I can quote it, but it went something along the lines, if you want to look it up.
Yeah.
Something along the lines of, if $600 is what you're waiting for to save your life, that you got other issues like marriage problems, mental health problems, and he basically concluded those issues with other personal issues, and that's what people got upset about.
Yeah. So I'm reading his official statement. So I love by the way how these news articles say conservative personal finance guru. That's what they call them. So they say conservative personal finance guru Dave Ramsey on yesterday shrugged off the need for additional stimulus checks amid a pandemic-induced economic crisis. So he says his official statement was, if $600 or $1,400 changes your life, you are pretty much screwed already.
Yeah, people weren't happy with that. And the thing is like he's not conservative. Like he's said things about Trump he doesn't like. So I don't see why they're kind of twisting it. I could see why people say he's conservative, maybe fiscally conservative, because he says don't get any credit cards, don't do any of this, don't do any of that. And so yeah, he was attempted to get canceled yesterday. And I think what people got upset about is the fact that he was intertwining like mental health and marriage problems with the whole thing.
Are they claiming that he was insensitive?
Yes, that's what they're claiming.
I see.
That's
what's the part? So I'm reading this article here. So he continues to say, after claiming it was hogwash and was smoke and mirrors, that forgiving the student loan debt would stimulate the economy, but that's the push by the Democrats to increase the amount of student loan forgiveness is simply a political gimme by progressives trying to buy votes. But here's what do you guys think? I got my own thoughts on this whole Dave Ramsey thing and his opinion. But what do you guys think of this? Do you guys agree with what he's saying?
Yeah, let us know in the comments. I'll kind of give you my take on it. I think if people understood, like if you're watching Dave Ramsey for the first time, I can understand why you're like, wow, this guy's an a-hole. But if with someone like myself, like we have a pretty good idea, and he has his own radio show and everything. Sure. That's his personality. Yep. Like this guy is as straight and as blunt as you can get,
which I appreciate.
And we need more of that, because not having that is the whole reason why America's in so much debt. I don't agree with everything that Dave Ramsey says financially speaking in terms of strategy and building wealth, but I think one thing that he has helped millions of Americans with is get out of debt. Yeah. And to get out of debt, you do have to be a little bit insensitive and tell people don't buy crap you don't need. He made a good point. There was data that proves that a lot of people that did receive, that extra stimulus check wasn't necessarily spent on necessities like groceries and things like that. There is data that shows that it was spent on things that don't really, help you out.
Like Jordans, bags. clothes, right, designer stuff.
The mall was getting stimulated.
Yeah.
Everything's getting stimulated. So
Exactly.
Nick, what are your thoughts? Do you agree when Dave Ramsey says that if you need $1,400, you were already screwed?
He does have a point, right? It was very I gotta admit the stimulus was very helpful to us. I have 3 young kids at home, and I'm the sole provider in the house. So I mean, everything was helping. But he does have a certain point when all you're doing is just focusing on $600, $1,400. Like, where's all that other money going and coming from in your life? That small amount, that little handout, is so significant. That's my biggest question. And to me, we kind of need a revamp on how we look at money in this world and what it can do and provide, and just financial education, man. Yeah. Bottom line, financial education. He wouldn't have to say that stuff if more people were financially educated.
That's very true. Yeah, and I think the 3 of us all agree. But here's the point that a lot of people are not talking about. And here's, I think, why Dave Ramsey, what he did in Fox News was actually genius. And I think he actually coming into Fox News, because he's a very blunt guy. I mean, how many times have we heard him on this radio show say, that's just stupid?
Well, he said the HELOC strategy was stupid.
He said the HELOC strategy, which I disagree. Again, you and I disagree with him on a lot of things.
Yeah.
When it comes to advanced financial strategy.
Exactly.
But here's why I think he was smart here. And here's why I think he ultimately outwitted Fox News. He knew if he were to say something like this, he would get canceled.
Yeah.
He can say whatever he wants on his platform. The Dave Ramsey radio show, he's got his crew, right? Yeah. The other guy, what's his name?
I forgot. The thing is, someone like him, he's too big to get canceled. So when I say cancel, they're an attempt to cancel him. If anything, what you've seen is this is probably going to help his business because he's got a lot of media attention.
For sure.
And although it was blunt, what he was saying was true to a lot of an extent. Obviously when you put it in the mainstream media and you act insensitive, CNN, they're probably going to find a way to, twist and say, oh, that's like a Trump character, stuff like that. But yeah, people are upset, but I think he was telling the truth, and I don't usually agree with him.
Well, here's why I think he's smart. I think the fact that if you look at, I'm not even going to focus on the $600 or the $1,400 because we all know that's true. I mean, how many stories do we know of guys getting, the $1,200 stimulus check, and we see them at Champs or we see them at Nike buying Jordans. I see that. I've seen that a lot. I don't know about you guys watching right now. I've seen that a lot. But here's ultimately why I think Dave Ramsey is a genius. And Rick Changlangi, I'm gonna get to your question because you asked a very, very good question. But here's why I think he's a genius. Is because not even focusing on the $600, $1,400, right? He talked about how pretty much that the forgiveness of student loans was a way for Democrats and progressives to buy votes. The fact that the media is now trying to cancel him proves Dave's point exactly. Because he says, well, if you're trying to cater and pander, and that's what he really is trying to say. He's saying that Democrats and progressives are trying to pander to the masses to buy the votes. The fact that they're trying to silence him even saying that proves the point that Dave is making. That they are trying to pander. And you can't pander without the masses watching you. So, Dave Ramsey, congratulations. You made your point. And you've been proven right by the reaction of the media outlets.
And the thing is like what people have to understand is like a lot of the videos we like we don't usually agree with Dave Ramsey. No.
So look, check out our other channels, guys.
Yeah, check out our videos.
We posted videos about how we actually disagree with Dave Ramsey.
Yeah, very, very often. So I think it's just like I said, he's ultimately helped, and his whole point was, and this fits with what he teaches, like have a good emergency fund. His whole point was that is like the whole reason you want to be financially free and the whole point of having the emergency funds is so in times like this, you don't have to rely on government handouts to survive. That was his whole point. There's nothing bad about that. I mean, a lot of times when you get diagnosed, it's not going to sound the best. It's not going to sound happy. I mean, a doctor's not going to, happily tell you, hey, like you have to do this. If you don't do this, then we're going to be in trouble. We need more of that. Enough of the, well, everything's going to be okay. We need people saying, hey, don't go out and buy dumb stuff. Like we need people like Dave Ramsey, although we don't agree with him all the time. I think he's very helpful.
Yeah. So Rick asked a question. I've heard Biden wants to extend the eviction moratorium and the forbearance moratoriums to September 30th this year. So we actually made a video about it, right? And I'm sure you saw it. Will this be a great time to buy multifamily property in Texas and or around the nation as well? So we're in this catch-22 right now of buying real estate because, well, if you're talking about multifamily in the form of I'm going to assume multifamily by you meaning 4 units, 2 to 4 units. Because typically the terminology in real estate goes that, a 1 unit is a single family house, 2 to 4 units is a multifamily property. So you've got your duplex, your triplex, and your quad, your fourplex. And then anything 5 units and up is commercial property. We call that apartment complexes. That's how we define it terminology-wise. So, Rick, I'm going to assume, right, that you mean like a 4 or 3 unit building. We're in this catch-22 because right now with your residential mortgage, your mortgage rates are so low. Money is so cheap right now to borrow. But at the same time, you know, the demand and the inventory is so low, and it therefore pumped up the demand, that prices for real estate are at an all-time high. Historically speaking, I don't know if I've ever seen a bigger disparity between what the seller wants and what the buyer wants. So I'll tell you this, Rick. I don't think Texas real estate is as great as people think it is. I will tell you that right now. And it's a very controversial statement in the real estate investing world. But here's what I believe. Warren Buffett says, right, infamously, when everyone goes right, you go left. Right now, the biggest states where people are building and buying multifamily buildings are Texas, Arizona, the Carolinas, Tennessee, and Florida, and surprisingly, Ohio. Ohio's up there. Columbus is actually one of the top 5 multifamily markets to invest in right now. But here's the thing. If everybody's investing there, if the masses are investing, what does that mean? What does that tell you? There's a lot of competition. Homes are being driven up. Prices are being driven up. And in my opinion, with real estate, yes, you know, we don't care about the value as much because we care more about the cash flow. But at the end of the day, that debt service is something that you're going to have to carry with you at all times. And you're going to have to be dead certain that the rent is either going to stay the same or it's going to increase. And well, in the next 2 years, I'm not sure if it is going to happen. Because if more units are being built, if more new developments happen, which they are in Texas, they're building thousands and thousands of units. What does that tell you about the saturation of the rental market? Is it going to go up? Is it going to go down? It's the basic supply and demand says if you build more things, the value of it goes down. So we'll see. But Rick, Rick, it actually is more like 20 units. So I think it's still the same, right? I think commercial lending is getting a lot tighter. So it is going to decrease the price a little bit. So, Rick, I'm going to say if you have the cash to back it up and you find an off-market deal, I say go crazy, right? Obviously, make sure it's fiscally responsible. You're running the numbers. There you go. You just said it, that your loan-to-value ratio is healthy. But in my opinion, I'd make sure that you're getting not buying it on the cap rate today, but average out the cap rate of that market wherever you're buying the last 5 to 10 years. And make sure you adjust your price according to that. Great question. Keep these real estate questions coming, guys. This is really good stuff. But speaking of which, do you have something to say, Joel?
Yeah, I actually have a question that kind of goes into that. I was watching a video. I think I was watching Dave Ramsey. One of the questions was about the student loan forgiveness. Yeah. One of the things that I wanted to ask about was someone had made a comment, basically, saying that forgiving the student loans will help because then now you have more younger people being able to afford homes, and this may save potential housing crisis that may hit. How do you think the student loan forgiveness will, if it goes through,
for sure,
will affect the housing market in terms of the ability to buy homes, what we're going to see?
Yeah, and obviously, we're all very familiar with how banking systems work. One of the biggest things that they look at is your debt to income ratio.
Yeah.
Right. But I've met banks where they actually do not count student debt as part of your DTI.
Yeah.
And they actually said the number one problem right now with first-time homebuyers is not necessarily the monthly payment. It's actually the down payment is the biggest issue that people have right now. So in all sincerity, I don't think Biden forgiving student loan forgiveness, which I don't know, guys. I mean, that's a controversial topic happening right now. Because all these people who paid off their student debt, I mean, they're going ape crap.
Yeah.
Because they're like, whoa. Like, what do you mean you're gonna forgive?
Yeah.
I had to work my butt off. Am I gonna get my money back?
Yeah.
Am I gonna get my $30,000-$40,000 back that I paid into the government for?
Well, we've dealt with our own clients, with the whole HELOC strategy part. We've used the HELOC to help people pay out their student loans, and right now, what we're telling some of our clients is, well, depending what happens, student loans is the last debt that we pay off at times because if they do forgive it, I mean, imagine paying off $100,000 worth of student debt. And then all of a sudden they forgive half of that. I think they're talking about $50,000 is what they're looking for. Yeah, that would suck. And so it's like, do those people, do they get a check right back of what they paid because they actually did the right thing? So, I think what you're starting to see, you're starting to see a lot of rewarding bad behavior, in my opinion, when it comes to, financial, literacy and things like that, which ultimately in the long term isn't good. Short term, maybe. Long term, I think it's not.
No. Yeah, I don't think so either. But I mean, to answer your question, I don't think the student loan forgiveness will affect, the housing market too much in my opinion. What I do think is going to happen, because here's the thing, here's the big, caboose when it comes to the housing market. Well, and we're going to talk about the FHFA extending forbearance programs by another 3 months. And Rick, we're going to talk about, how it may actually be the whole eviction moratorium may be extended to September 30th. But, I thought I want to bring up this because, Yahoo Finance posted a great article, pretty much saying that, and there's the Lending Tree chief economist, and I saw this video yesterday while I was working out, but Lending Tree chief economist Tendai Kapidze, I'm sorry if I butchered your name, but he made a really good point, right? So one of the biggest things that people are right now concerned about is the fact that, well, all these people moving out of, they're moving out of these big cities, they're moving into secondary markets, they're moving into the suburbs. He made a really good point that actually about 85% of people moving away from the city actually move within the same city. So they're still moving, but they're still remaining within within the greater area. And 15% of those individuals are moving just from one bigger city to another bigger city. So they're moving from Chicago to Austin. They're moving from Chicago to Charlotte. So I thought that was a really good point to bring up, because that's one of the biggest myths right now in the housing market, that a lot of people are moving out of the city and they're moving into these suburbs. They're moving into kind of the middle of nowhere. And it's not as drastic as people think it is. I think one of the things that, we've gotten to a nasty pattern of recently with the media is just over dramatizing everything.
Yeah.
I mean, whether it's this whole thing with the stimulus, whether it's whole thing with social justice and all this stuff. Like Nancy Pelosi, God bless her heart. She literally said when a reporter asked her about the $15 minimum wage, which we will talk about here in a second. All right, but I want to address Mr. Tadai's question, and we'll finish this thought. But Nancy Pelosi, literally the only thing she said when the reporter asked her about the $15 federal minimum wage, she said literally verbatim. And this is from CNBC, so this is not from some dude living in his mom's basement. This is from CNBC. He says, "We're very proud of that. As I've said, 27 million people will get a raise. 70% of them will be women."
Yeah. Does she? I mean, if that, I don't even know if that data is correct.
I don't know
if
either.
someone fact checker does it not imply that 70% of the people working under minimum wage are women? Is that true? I mean, is that a true fact?
Yeah,
is
I
that
don't
data?
know.
I'm curious to see if that's true.
Yeah.
Because if they're raising the minimum wage and she's saying 70% of the people are women, does that not mean that 70% of the people on minimum wage are women? I mean, I'd be curious to see if that's true. But yeah, I'm going to read out the question if you don't mind. With Mr. Todai, he says, I own a home outright. I have 2 roommates that generate rental income and have a stable job. Now I'm looking to buy an investment property. Should I apply for a HELOC or get a loan on the investment? I'm guessing like a cash out refi type of a thing, or get a HELOC.
Yeah, so you own the home outright. You have full equity on it. So here's the thing. People always ask questions about what should I get financing from? In this case, sir, you have a single family home that you have, excuse me, full out equity in. People never ask what to get the financing to. So my concern is that if you are looking to get an investment property, and Mr. Todai, I'm assuming that you're looking to buy, a rental property. Sorry, guys. I don't know what happened.
Need some water?
No, I got water. I think there's like a raspberry seed. You know what I mean?
Oh.
I'm getting canceled. Maybe that's what's it. It's the chips they're putting in all of us. But, if you're getting a long-term rental property, which is what I assume you're doing, I would not recommend getting a line of credit. I would not do that at all, because it's a short-term form of financing for a long-term play. If I were you, I would look to get a regular traditional, conventional loan, or potentially even buying another multifamily property, maybe like a 2 to 4 unit building, and getting seller financing. And people ask me all the time, well, Daniel, why would seller financing make sense right now when the interest rates and the banks are super low? Well, it would make total sense, because, imagine if, Joel was selling me a bag of strawberry. I don't even eat strawberries. Why don't I? Imagine if Joel was selling me tickets to the next Conor McGregor fight, right? Let's say he's selling me the ticket for, $500, and let's say Nick comes along and he says, hey, I'll sell it to you for $450. What is Joel pressured to do now? He's pressured to lower the price, right? He's going to go, you know what? I'll match that price. So it's the same thing with seller financing. A lot of sellers, everybody knows how low the rates are right now. So if I'm doing a deal with with the seller and I want him to finance, I want him to carry the note, and he throws out 6%, I'm gonna say, well, the bank's giving me 3%. Can you at least go 3.5%? Can you go 3.25%? Can you do that? So Mr. Todai, I would say getting owner financing or getting a loan on the investment is probably a better alternative than getting a HELOC. A lot of people just fall into the temptation of, well, I want to use the equity that I have in my existing home to use it to get another property.
Yeah.
It's tempting, but it doesn't work 100% of the time.
Once again, I think it's part of the FOMO, the fear of missing out right now, which is, I was listening to, I really like Robert Kiyosaki's stuff, another person that's been attempted to cancel, or they've attempted to cancel in the last. And one of the things that he was really talking about, and a lot of times, we look at the markets and we look at the data, which is good because it gives a lot. But a lot of times people don't realize even how much like the emotion behind what's going on can affect the market as well. Right now, the amount of greed happening when it comes to buying anything is probably the highest we've ever seen.
Yeah.
Everyone wants to purchase homes just because the interest rates are low.
Yeah.
Everyone wants to buy Dogecoin. Everyone wants to put their money.
Hey,
in the
don't
stock
talk about
market
Dogecoin.
because like I said, it's the fear of missing out, in my opinion. But that was a good question.
No, I agree. I think people right now are too trigger happy with real estate. And, unless
everything, stock market.
Yeah, trigger.
Bitcoin.
That's how crashes happen.
Yeah.
That's how corrections happen, folks. All right, so I D-Storm 2.0 as opposed to 1.0. Said, I live in Staten Island trying to get my first multifamily property, but prices range, I'm assuming $670,000 to $1 million. 2-family around those price point. Rent for 2-bedroom rents for $1,800 to $2,000. 3 bedrooms $230 to $250. So $2,500. So here's my thoughts on that. Even looking at the numbers, you're already negative. Because if you're in Staten Island, chances are you have very similar tax brackets and property taxes to our home state of Illinois. Your gross income on the bright side, Mr. Brightside, is $4,500, which means that your net NOI is probably going to be around $225, so $2,250 a month, and that's being very generous considering that your expense ratio I'm calculating is maybe half. And a debt service payment on $670,000, even on the low end, is going to dig really hard into your cash flow. And I'm assuming that you probably won't have even enough money for repairs, for a lot of things. So D-Storm, I don't like it. What do you guys think about purchasing a 2-family property, price point around $680,000, $750,000? You're paying $400,000 per unit, or $350,000 per unit on average. I'm not a big fan of that. I think you can find better deals elsewhere. Yeah.
So do you suggest for people that are placed like New York, California, like, is it just like, if it's their first, this is actually a good question. I wanted to ask this. For someone that's in California or New York and they're pretty new to investing, because you hear it out there, like, always start in your backyard. With how things are at right there, do you suggest people still do that?
Yeah.
Or do you think that, they're so screwed that you're just better off going out of state?
Yeah. Here's the thing. I'm not a big fan of when people say, like, oh, all the time in real estate. You should all the time universally do this every single time. Because real estate, the industry is so vast. I mean, when you're talking about real estate, you're talking about so many different asset classes, strategies. Yeah. Every situation that depends. Because, well, what if you're a dude living in California, you already own a successful business, and you're looking for tax benefits, you don't mind the California market, you've already got a solid team, then yeah, man, invest in California. And right now, I'd actually make the argument that right now, I don't know if there's ever been a better time in history to invest in California, because everyone's leaving. Yeah. The supply and demand is dwindling, right? But markets like California, East Coast, West Coast, the markets fluctuate like this. They're like a roller coaster. Yeah. Right. In the Midwest, right, we're flat. We tend to be more consistent. Like if you look at Ohio, the entire state of Ohio, I think when you look at housing markets, rental markets, the overall real estate market, they have a plus minus 3% in value. So it's like, you know what I mean? So I think California is going to bounce back, because at the end of the day, it's California. There's a lot of
Newsom's getting recalled. They've gotten enough signatures now, from I heard, to do it. So I mean, there might be a
turning point.
They may be cleaning up the mess. I mean, they were saying that 1/3 of the votes that were wanting to recall Newsom were moderate Democrats. So even Democrats are getting to the point where, like, yeah, this is I mean, if you look, I've watched videos, like it's bad, like downtown LA, like just
it's
the homeless issue is unbelievably terrible.
It's not good.
You know, the drug problems. I mean, there's literally crap on the streets because you know, people don't know what to do. So yeah, it's definitely getting interesting.
Yeah, but I mean, I think even if you look at rents in San Francisco, I mean, they've gone down. I've seen some units go from $4,500 a month in rent. Now they're down to like 24, 25. So I mean, you know, it will bounce back, but the value is there. I think if a smart investor were to go to California right now and buy something for cheap, I think they did a good job. They could turn it around.
Gotcha.
I think so. All right, gentlemen, let's talk about this minimum wage thing.
Okay.
Let's talk about the $15 minimum wage. So let me set the table in terms of what happened. So right now, Nancy Pelosi said on Thursday that the $15 federal minimum wage will be included in the coronavirus aid package, and that her chamber is preparing to send it to the Senate. And considering that, you know, the House and the Senate is majority Democrat, from what I know, it seems that it's most likely going to be passed. $15 minimum wage. What happens to our economy? What do you guys think?
I'm worried for small business. Like, that's for me. Small business has needed the most help, and I think with SBA, I mean, they've done an okay job, you know, with what they've gotten out. But once again, it's like, how are you going to make, you know, these restaurants? The first thing I think about is restaurants. Yeah. Like, I think that's going to wipe them out. Yes. Because a lot of restaurants, they hire people like, you know, one of the first jobs that I was a bus boy. I didn't get the job because I had to pay rent. I got it because it's a good first job, and you know, it worked out very well. So I think it's going to affect, you know, small business the most, and not in a good way. I know it sounds good on paper, right? This whole minimum, you know, raise the minimum wage, but it worries me, you know, for small businesses. That's the first kind of thought that came to mind when they passed that, or you know, when they introduced that.
Yeah, and it takes away the small business's ability to provide customer service, that intimate aspect of what people want. It really is going to kill small business. Let me give you guys an example. And Gabriel, I'm going to address your question, Halkoski. Gabriel is actually a one-on-one coaching client of ours. But I'm gonna address your question here in a second. But I want to give you guys this analogy. So both of you guys are we're all big MMA fans. Yeah. Right? Which, by the way, Nick, you know, we got Gilbert Burns versus Kamaru Usman.
Yes, sir. That's going to be Saturday. A scrap, sir. I think that's going to be better than when he fought Colby.
Oh, okay. All right, we'll talk about that later. Mm-hmm. But I'm going to give you guys an example. You guys are both big fight fans, right? So who's going to win in a fight? There's one guy who's never trained in his life, right? Never trained. You know, he's athletic. You know, let's say that he maybe played football, basketball, whatever, when he, you know, high school or college. And then there's another guy. Let's say he's trained his entire life. Yeah. You know, he's a Muay Thai kickboxing champion. Let's say he's a Golden Glove champion. Let's say he's a black belt in Brazilian Jiu-Jitsu. If these two fought, who would win?
Oh, the football guy, hands down.
Why?
I'm totally kidding. No, that guy's gonna get smoked. You know why? Because all that experience, like, yeah, okay, there's always a puncher's like chance, right? But that other guy, the trained guy, he's been fighting for a long time, and he's probably seen a lot of different situations that the athletic guy has probably never seen in his life, especially being a black belt in jiu-jitsu.
For sure. What do you think, Joel? Who's gonna win?
I mean, we saw Jake Paul versus Nate Robinson. That should probably tell you what's going to happen with that.
Yeah. So you probably think that the experienced martial arts. All right. So let me throw in some more information. What if I told you that the mixed martial arts weighs 135 pounds and the big football dude weighs 290 pounds?
So I'd give the football player. I mean, just because of size. I mean, he's just big. He's a bigger guy. I mean, his punches won't feel as hard, you know, versus the other guy if it's the same, you know, weight.
Right.
And stuff
Let's say he's got like the body of like Shaquille O'Neal, like in his prime.
Yeah.
You know.
I mean, we saw. I think Shaq fought Oscar De La Hoya or something, and he couldn't hurt Shaq. So that tells you what would happen there.
So here's my point with that. My point with that is that no matter how good the small businesses do now, because of this minimum wage, they've lost the fight before it already began. Yeah. Because these small businesses, I mean, they're competing with Walmart, they're competing with Target, Amazon, et cetera, et cetera. It's to the point, and Amazon, Walmart, they are the 290-pound dudes. Yeah. Right? They're so big, right? And these small businesses, Nancy Pelosi and this whole thing has destroyed the small businesses even before the fight even begins.
And these big corporations, they wanted minimum wage because it does benefit them. I mean, one of the best ways to win at anything is to eliminate competition. Yes. I mean, that's exactly what happened in the election, right? I mean, technically, I think more people voted against Trump than voted, for Biden in a sense. But, I think that's what you're seeing with this.
Yeah.
I mean, Amazon's gonna win. We saw them winning in the pandemic, and that could serve as as a test because because a lot of these small businesses were closed, they reaped the benefits, and I'm sure they liked their net worth going up by billions over the pandemic, and why stop there? Just get rid of them all at once. If I was a big corporation, that's what I'd be thinking if I was.
Yeah. And I heard the counterpoint. And Gabriel, I am going to get to your question, and also Rena Sears, we saw your question. Let me make this point, and we'll get to your questions here in a little bit. But there's a counterpoint of saying, well, let's talk about the restaurant industry for a second, right? Well, wouldn't it make sense, because if you raise the minimum wage to $15, couldn't you set a culture where you don't have to tip anymore? Just so that the bus boys and the waiters can still make their money. Right, but the money doesn't come in the form of tips, because most of them, they get paid what, the minimum wage plus tip, right?
Yeah, I think it's like minimum for waiters is like $5 and plus
right, and that's
the tip. Yeah.
And the justification is that, well, you get tipped.
Yeah.
Here's the issue I have with that, right? The issue I have with that is that now the dollars are not coming from the customers; it's coming from the actual restaurant.
Yeah.
To put the money in the pockets of the waiters, the bus boys, and whatever. Because here's the thing, I love the concept of tipping.
Yeah.
Right. And Lisa and I, we go out a lot because we don't have any kids, right? So we go out a lot and we eat. And for me, I tip minimum 20% every time. If somebody does a great job and I hear their story and they're good people, they're solid. Sometimes I'll tip $100, I'll tip $50, I'll tip 100%. I actually tipped somebody $500 at one point because they were so good at what they did. And she was a single mom and she was very positive. She had a great attitude.
That's awesome.
She was humble. And she didn't want any handouts.
Yeah.
She's like, look, I'm a working person.
Yeah.
I'm in this. So the big issue I have with it is you're not making it performance based anymore. So the great waiter is going to get paid the same amount as the crappy waiter, who has a horrible attitude and they cuss at the whatever. But not only that, but the money that they're getting paid is not coming from the customer anymore. It's coming from the small business owner. It's coming from the owner, and you're eliminating.
Yeah.
Right. This is how you kill small businesses.
Yeah.
I got a tinfoil hat comment.
What's up, bro?
All right, here we go. So, if small businesses get choked out, right, they lose their labor force, and they all have to go end up working for Amazon, Walmart, all these big, huge corporations. That's the great reset in itself. Because everybody's working for the same company.
Or I could see how that would lead into some sort of UBI connection.
Right.
How, not only that, because, a lot of those jobs are going to be taken by Amazon, not by other people, but by computers.
Right.
Then all of a sudden we got an introduction to UBI. And all of a sudden it actually makes sense.
Here we go, communism. All right.
And so, but yeah, I think it's going to ultimately hurt small businesses. I can see, like I said, again, a lot of stuff that you see on the mainstream media, I could see how, it just, when you watch it and when you see it, raising the minimum wage, it just sounds like this utopia, awesome, everything's gonna be paid more. But people, what they don't do is they don't read that second or third sentence on really what it's gonna do to affect that mom and pop shop.
Right? They don't educate themselves on what actually is gonna happen.
These are the people that we want to help. These are the people that I don't know what the stat is with how much small business employees in America.
Oh, it's up there.
But I know it's a lot.
Yeah, it's
and
up
the
there.
fact that we're just pretending like, hey, it's not a big deal is a problem.
And people will be fired.
Yeah,
people will be fired because if you're a restaurant and you have 5 waiters and you can only afford to keep 3, what's gonna happen?
Well, I went to a restaurant on last Saturday with my mom and Catalina, and there was only 1 or 2 servers there.
Yeah.
And part of it obviously is the whole pandemic thing, but it's like here restaurants are barely open back up. And it's not just restaurants, it's mom and pops, it's businesses, that have, 13 to 25, 15 to 25 employees. But here you are, you can finally open back up. Cool, right? We're past that. And then all of a sudden now it costs more to open, right? Sure. Not only with all the things you got to add, you got to now pay, people more. And it's just, to me, it's a recipe for disaster for small business.
And here's another thing. This is ultimately going to take jobs out of America because people have come to me. They're like, "Well, Daniel, don't you pay your employees more than $15?" Well, we do. Yeah, we pay our employees a lot more than $15 an hour. But here's why. The reason why we're able to get away with that is because we also hire virtual assistants.
Yeah. And
we pay them $3, $4, $5 an hour. Mm-hmm. That's how we're able to get away with it because we hire a lot of VAs to do what we need them to do. And honestly, it's a lot of menial tasks. It doesn't take a rocket scientist to do any of these tasks. It literally is just data entry, some of it. But we hire, but that's why we're able to get away with it. So a lot of companies are going to shift to what we're doing.
Yeah.
They're gonna start paying their employees, yes, $15, $16, $17 an hour, but a lot of them are going to hire VAs and people get fired.
Or automate.
Or
automate a lot. And I think like people just, I feel like people make the assumption that like if you own a business, no matter if it's big or small, like you're ultimately just rich. I think you're this rich guy.
True, yeah.
You just try to take advantage of everyone. You exploit everything. One of the things that people have to understand is that's not true, right? Just because you own a business doesn't mean that you. And like I think I said this the last live. Most people that I know, like business owners, they want to pay their people as much as they can. Like they're not out there to like, hey, I'm going to cheapen out on how much I'm going to pay you. They want to. But when you force them, it affects their ability to run a business effectively. Ultimately, when you're running a business, you want to have the best customer experience. It's going to lack because you're right. Then you got to pay everyone the same, and it's a disaster. But I don't know if you want to get to the questions.
Yeah, let's get to the questions. I have an interesting theory on how business owners can actually get around that. I want to see if it's tax fraud though. I don't know. But anyways,
maybe we should hold off and check.
Yeah, maybe we should hold on, right? So Gabriel Halkowski said, "What do you think about paying $20,000-$30,000 over asking price in the Milwaukee market for a 2-family? I placed multiple solid offers over asking, or would you wait because you believe the market will correct?" So I believe, I don't care when the market is, you should never overpay for a piece of real estate. And I understand it's very competitive right now, but I also think it depends on the deal. So, how do you know that it's overpaid? Did you pull comps? Did you do this? So there's a lot of risk involved with overpaying for properties that not a lot of people are aware of. Let's go to Rena Sears. Do you recommend using, oh, by the way, Gabriel, you have my email, you have my cell phone number. Feel free to send me the subject deal that you're talking about because you're a coaching client. Okay, Rena Sears, do you recommend using the HELOC method on credit card debt and car loans before the mortgage? I'm going to give that question to you.
It depends. One of the things that we do here at the Kwak Brothers is when we work with clients specifically and their whole debt payoff and the HELOC strategy, we calculate what is called a cash flow index score. This basically gives the inefficient, we basically are able to score each debt based on inefficiency. And depending on what the inefficiency tells us, it may be that, we pay off the car loan first before the mortgage or vice versa. It would really depend on what your monthly payment is and what your interest is and what the total loan amount is. If you want, send us an email at info@thekwakbrothers.com. Ask the question, and then, we'll be able to answer it and maybe give you a little bit more direct help and figure out how that would work for your situation, Rena. But that's a good question. In most cases, yes, but not all cases. So that's why I'm telling you, reach out to us. So
you need a little bit more information on Rena to be able to get a good assessment of what she's trying to ask. Okay. All right, D-Storm 2.0. Guys, I forgot to mention that I'm selling my single home to purchase for the down payment, which is worth $468,000. I have the remaining balance around $230,000. What do you guys think of me doing that? So honestly, D-Storm 2.0, I think the answer that I gave to you, it referred more to not what you can generate right now in terms of your HELOC or you generating cash. It's what you poured into, right? So it's kind of like saying, hey, Daniel, and I'm going to use this analogy, but it's like saying, hey, Daniel, I want to, pour water, right? I want to pour this water into this imaginary bottle. For me, it doesn't matter how clean that water is, right? Because right now, D-Storm 2.0, you're talking about everything with the water in here. You're saying, oh, but what if I make this water cleaner? What if I do this with this water? The point I'm trying to make is it doesn't matter how great the water is in here. If you're pouring it into a bottle that's disgusting, it's got mud, it's got dirt, it doesn't matter how clean that water is in here because at the end of the day, it's still going to be dirty. The point I was trying to make is I don't think paying $700,000 or $1 million for a duplex is the wisest thing in the world. And look, in some cases it might be, right? But that's if you're able to get the income that property is worth, right? So again, you're getting $1,800 to $2,000 on one unit, you're getting $2,500 on the other unit. Even with those rents, you're not. And by the way, those rents are not far off from where right. So my wife and I, we live in a 3-bedroom apartment. We pay roughly about a little over $2,000 for our rent, right? So that's not completely off the grid of what my familiarity is.
It's a nice apartment, though.
It's great. We love it. You know what I mean? It's more like a townhouse, but we love it. It's perfect for the two of us. We don't have any kids.
For future kids.
No, man. There's no future.
Guys, get this to 40 likes and Daniel will have children.
Yeah, hit that like button.
Last week we're gonna move to Nashville. This week is gonna be.
So last week we needed 30 likes to move to Nashville. This week, get it to 40 likes and Daniel will start having children.
He will have kids.
You know what?
Get it to 100.
Get it to 100 likes and we'll have kids.
There you go. Okay, but you know, it works for us. But in all sincerity, I don't think the deal that you're moving money into is the best, right? I think there's different alternatives. I mean, unless you're looking to house hack, you know, where you buy the property, you buy a 3 flat or a 4 unit for the sake of living in one and renting out the others. You know, in that case, yeah, it saves you on your management costs. You know, you do the maintenance. So in that case, I don't think it's terrible, but I still think you can get a lot more bang for your buck elsewhere, just in my opinion, right? Okay, so are we done with the minimum wage conversation? Do you guys have anything to add?
Yeah, I mean, I had my point. Like I said, it's just for me, we're small businesses. That's where I kind of draw the line. Period for me.
Yeah, so
I'm curious to see what's going to happen though.
I want to touch on this. The FHFA extends forbearance periods an extra 3 months, which, by the way, leads us into the conversation of most likely the eviction moratorium. A lot of these forbearance programs are going to continue to be extended. Biden's proposing that he wants to extend the eviction moratorium to September 30th.
When does this end? I'm curious.
Know.
Like when does this end?
When the market crashes, Joel. Maybe that's when it ends.
I'm shocked to see, and like, is this part of a bigger plan that they're trying to, you know, get used to? Are they, you know, yeah? When does this end? I mean, we're starting to head to almost a year of people living rent free, technically, right, without being able to get evicted. Right now, I could probably sense a lot of landlords that want to get the freak out.
Yeah.
They want to probably sell as soon as they're able to, but
I think if you're a landlord right now who's struggling with a tenant not paying rent, you need to put that home on the market now. Right now. While the prices are astronomically high, while people are overpaying for single-family houses, by the way, while people are overpaying for multifamily houses, right, multifamily units, sell it right now. Because here's what I think is going to happen. I think the prices will drop. You know, I think they are going to extend this thing to September 30th. We just did a video. Nick and I did a video about what I believe is going to happen to the housing market in 2021 if the eviction moratorium does get extended to September 30th. I also did another video last week, or was it this week, Nick? It got released on Monday.
Yeah.
We released a video on Monday on how it actually, my solution, what I think is going to be better to improve. Go watch the video, guys, because I don't want to repeat everything I said in the video right here on the live. But long story short, I think these guys are committing suicide. I mean, they're really trying to tank the market, and that's what drives me nuts. I mean, how many years has Joe Biden been in office?
You think he's trying to tank it, or you think he's trying to save it?
I don't think it's good. I mean, whether he's trying to do it, whatever or not, you know, I think it's kind of like a slow Down syndrome kid playing with a kitten. He might try to love the kitten, but whether he loves it or not, he's gonna kill that thing.
Yeah.
You know, because here's my point. You know, Biden, Pelosi. And I don't care if they're Democrats, Republicans. I don't care if they're either one. They're either one on both sides of the aisle. If you have been in political office for 40 years, and that's been your full-time job, I'm sorry, you have no business writing policies on what happens with housing markets. You have no business.
Because if I was them, I would do anything possible to make sure that there's no crash that happens. Because what's going to happen, like you have, you know, all the conservatives, you know, they're going to do what, you know, they know it. They're going to blame it on Biden, even though technically it's not all, like, let's be honest here. It's not all their fault. Like, it's not just their policies will lead to whatever.
It's monetary policy. It's fiscal policy. There's a bigger picture at hand.
And I'll make the argument that right now, a lot of people think that certain policies, political policies, impact a lot more than it probably actually does.
Yes.
I actually think it doesn't impact as much as what people make it out to be. Like, if we were to have a crash, we'd have all these people blame the Democrats, even though, you know, and you know, I don't think it affects it as much as we think.
But I think a lot of the stuff that he's doing is just, it's definitely not helping.
Yeah.
You know, what was that guy of Mice and Men? Was it Lenny, the big dude that killed the kitten or the puppy, whatever?
Not sure.
Oh, that's sad.
What you're talking about.
You know,
I have no idea.
But in all sincerity, okay, I mean, I guess I'm the only one that went to freshman English. But,
maybe.
But in all sincerity, like, I don't think it's helping. These guys have no business writing housing policies. You know, it's not helping. But go watch the video, guys. Let me know your thoughts. We got a great.
Well, Daniel, let me ask you this question real quick.
Yeah, what's up, brother?
How much has the Fed invested in mortgage-backed securities this year, or within the last year?
Well, I think that number has been $700 million.
$700 million.
Yeah, in mortgage they bought they purchased $700 billion worth of mortgage-backed securities.
So what happens when all these landlords and property owners, they default on their loans?
Well, here's the thing. Here's the big question I have is I don't know why the Fed would buy these mortgage-backed securities if they know and they're aware of the big possibility that these mortgage-backed securities may actually default. they may actually fall to the wayside. You know,
one of the things I was hearing too in terms of the mortgage crisis is that I think back in 08, you know, the mortgages that were in trouble obviously were residential, stuff like that. People, you know, they were getting loans for everything. One of the things that I've seen data on, I'd have to go back and see. I don't like to say things without having the data, but one of the things I noticed was that a lot of the mortgages right now are in trouble are mortgages for, you know, things like, you know, cruise ships, you know, hotels, these big, like people, these different types of banks that
Mall of America.
You know,
do you know the mortgage costs on Mall of America?
What is it,
dude? It's like in the millions.
Yeah,
it's ridiculous.
A month?
Yeah, a month.
Yeah, that's crazy.
I can see that.
So
it's so you guys are saying that commercial stuff's like under fire right now, and not residential.
No, for sure. I mean, I think retail is still falling. You know, we can't know that for sure. But I mean, that's a rabbit hole you just asked, my friend. But I want to get to Damian Lloyd, all-in-one loan or HELOC. What do you think, Joel?
So an all-in-one loan it's a HELOC. An all-in-one loan is essentially HELOC. The only difference is that it has certain, I'd say, like automation benefits, like direct deposits and stuff like that. So an all-in-one loan is a HELOC, but all-in-one. So it allows you to do direct deposits. It allows you to kind of have your checking account in there, and so they're technically the same thing. I mean, you know, I like the all-in-one loan because it kind of, you know, combines everything together. They do tend to have a little bit of a higher closing cost than a regular HELOC, so it's kind of a catch-22 on what you're really looking for. But that's a good question. Essentially, it's the same thing. It's just there's a little bit more benefits to the automation aspect of the all-in-one loan versus a regular HELOC, which can be tends to be a little bit more manual. You know, have to write checks in and out and stuff like that. That's a good question, though.
Yeah, no, that is a good question. Mr. Todai, do you know how much would the bank lend for a mortgage? Last year, I made $25,000, but I do own a $350,000 home and no other debt. That's why I'm hesitant on the traditional loan versus HELOC. So either way, they're going to ask for a down payment. So if you have the liquidity, great. But that's what the bank is mainly looking for right now, especially with investment properties. You know, I think you mentioned was that 20 units? Let me go back in the chat. Was that a 20-unit building?
And guys, we're one like away from Daniel having kids, so make sure you go ahead and like, click subscribe if you haven't already.
Yeah, subscribe and he'll have two.
Awesome.
He'll have twins if you subscribe.
Oh my god. So so Mr. Toy, that's why I say look into seller financing, look into other creative ways of buying a home. There's actually plenty of ways right now that the banks are willing to be creative on, like short sales. I mean, there's subject to acquisition. There's so many things that the banks are willing to be creative on. But in terms of a HELOC, I just don't know how that's going to turn out with a long-term rental property. You know, I just don't know. I don't think it's the best strategy to do so. And it seems that you're kind of trying to force it. You know, you're trying to force a HELOC or whatever strategy. I always say knowledge is freedom. Applied knowledge is power, but knowledge is freedom. I think, Mr. Todai, I think you should really get to know a little bit more about how to acquire properties other than a HELOC, so to speak. And talk to a banker. You know, don't go through the underwriting process just yet, but talk to a banker about your financial situation. Hey, what are my options here? And see what you can get. But I think you'd be very surprised at different creative financing options that actually you would find really interesting. D-Storm 2.0, I really appreciate that, guys. Thanks a million. Thank you. Thanks for being on. Foxtrot Delta Cruise, is it smart to break into the, what is that, PERE? Corporate world given today's market situation. What is PERE?
Yeah. What does that stand for? I just try to look it up.
Is that private equity real estate? Is that what you're asking? Foxtrot? Is that what you're referring to? Private equity real estate?
If you can just clarify that in the comments, that'd be awesome.
Yeah. Well, let's say that it is private equity real estate. I think it depends on what private equity real estate you're getting yourself into. What asset class are they focusing on? I mean, I think if you're talking about my private equity real estate fund, I think that's great because we're focused on things that actually take advantage of the crisis, that takes advantage of a potential crash. What we're doing now is we're investing in a market where the entire place is actually privatized. So regardless of what happens with government, regardless of what happens with the market, we're still good. You know, and it actually took me months and months to research this place. But my private equity investors are doing just fine. They're doing solid. We're actually having phenomenal upside. But having said that, there's other private equity real estate funds, your 506 syndications, that what they're doing is they're finding distressed multifamily and they're overpaying for it first and foremost. They're paying a 6%, 7% cap rate on a distressed multifamily asset. I don't know what these, mouthy fools, right, as Conor McGregor says, I don't know what these guys are doing, but they're planning on raising the market rent. And they're planning on refining investors out, which, by the way, that happened again, ding, 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 in 2006, 2007, where investors would buy distressed assets. They would raise their rent. They would increase the value. They refi out the investors, and that'd be it. Well, guess what? In a market where the banks are getting tighter and tighter and tighter, and they're going to continue to increase the bar in terms of how much equity you have to keep in your multifamily property and how little they're going to let you refinance. And also in a market where values may drop at any second, and in a market where development, which, by the way, is happening right now, is going to lower the price of rent. I don't know if that's the best strategy right now. And these guys are using bridge loans with interest-only aspects. They're using hard money. These guys are reckless. It's the wild, wild west. So I don't think getting into a private equity real estate fund where they solely focus on distressed assets, I think it's musical chairs. The values is not going to increase at some point. It's going to stay the same or it's going to drop. The rents might not go as high as they may want. Or the banks might not refi out as much as these GPs are wanting to. So there's 3 risks right there that are very possible of happening this year. I don't like that side of PE, but it just depends on what asset class and how smart these guys are. I like what we're doing at my company, right?
I have a question that a lot of people, I feel like, are asking, and like whenever you ask this, I feel like we don't get a straight answer, and we may not from you. I'm just going to kind of challenge you here a little bit. Let's say things continue to happen the way that they are. You see a lot of these you see more money printing. Do you have a timeline on what you think we'll actually see a crash happen? Do you have like, hey, this stuff continues, this is potentially the time of what we have?
I think they're going to kick the can down the road.
You think so?
Yeah.
How long can we do that for, though?
Well, here's the thing: the great George Gammon, right? Which he's got a YouTube channel, right? He says, the longest that an economy can go for, or maybe it was Richard Gammon, or it was George Gammon, or somebody else. I apologize if I don't know the name. But this individual said the longest an economy has ever kicked the can down the road was 50 years. But eventually, it's kind of like when you get in trouble and like your dad's coming home.
You keep making up more lies.
You keep making up more and more. Eventually, it's going to catch up to you. And eventually, you're going to get the beating of your life. Well, I'm sorry. Today's parents, they're not going to get a beating. They're going to get a strongly worded letter.
They're going to take away their iPad.
They're going to take away their iPad. Not even that. They're
Give
gonna
it
say,
back.
Hey, do you want to get in trouble? Oh, you don't? Okay, well, let me just go back in my corner and let you just be you. But you could choose whatever you want. You want to be a boy? You want to be a frog?
Is this why you're not having kids?
Great, So
Well,
it's like,
breaking news,
well,
we
he's
hit
being-
40 likes.
He's being creative, guys. He's
Daniel's
not-
having kids. We hit 40 likes.
Guys, I said 100. I said 100. Let's backtrack. But I think we're gonna continue to kick the can down the road, and I don't know. I think if it does crash, though, I think it possibly could happen. Maybe late 2021, maybe early 2022. But again,
And that's soon. That's right around the corner.
absolutely. But I wouldn't be. But here's the thing: a correction is going to happen. Just because you have all these people talking about stocks and everyone's getting into investing. And historically speaking, whenever you had the record amount of participation from private investors, that's when you see market corrections.
I was listening to a story. It was one of the former presidents who liked to invest in stocks, and it was a story. I forgot what his name is. It was back in time, and he was getting his shoes cleaned, and the young guy that was cleaning his shoes at this time was telling him which stocks to buy. And at that time, he was like, yep, my money's out. Yeah. So as soon as he noticed that there was like these young kids like that really don't know what they're talking about, talk about it, that's when he was like, it's time to get out.
It's time to
and we're seeing that. Everybody and their mom right now is a stock investor,
crypto
investor.
Well, how many governments have bought gold? Russia is like just so like bullish on gold.
Yeah. Which I would agree with. I actually would agree with Mr. Putin. That I think right now is a time to buy. Well, I don't know, depending on what prices are going. But so many people have bought into cryptocurrencies. It's actually devalued real commodities such as gold, silver, et cetera, et cetera.
Yeah.
But I say we'll see. But it's 11:55 right now, guys. Thank you for joining us. I hope you guys have a great weekend. I'll be spending it watching Usman versus Burns. Who you got, Nick, on that fight?
I don't know, man, but it's gonna be really interesting. I don't know what the odds are, but I gotta say I think Burns has the tools to take out Usman.
No.
You don't think so?
You don't think so?
Give me a good reason
Marty
why.
fake Snoozman.
How many fights has Usman lost?
I think what, 1 or 2.
He hasn't lost that many, but you got to think about this too. Burns is a jiu-jitsu black belt who competed at the highest level of jiu-jitsu. His stand-up is solid. His wrestling solid.
Yeah.
What can he do outside of that? I mean, look at the fight that he had with Masvidal with Usman. Yeah, he took him down and stuff like that, but you can't do that to Burns.
Yeah. Yeah, I think I got Burns on this one. I mean, Kamaru's got that style where like he just weighs on you.
Yeah.
He's got that constant pressure. He's kind of like that wet blanket. I personally think Burns got it.
He's got the tools.
I think if you give Usman another shot with Colby, I think Colby takes it.
Oh,
I think so. I think Colby takes it. I think here's what I think is gonna happen. I think Burns is gonna beat Usman. Burns is gonna do a title defense against Colby, and I actually think Colby beats Burns.
Wow.
I think so too.
That's some MMA math right there, bro.
Yeah, I think so too. Yeah, but anyways, guys,
Interesting.
have a great weekend. Anything else from you two that you want to say?
No. I know we didn't talk too much about crypto, but
Oh, that's right,
we
yeah.
had the big news with Tesla and Elon buying
That's
the
right.
Dogecoin.
1.5 billion. They're talking about Apple, maybe doing it. Someone said, I heard Dan is a beast at ping pong. Yeah, who's to count the cost? Who's that insider? Who has contact with insider?
I don't know.
Maybe it's Mello.
Is it?
Maybe, I don't know, but it's just like it's like one of those things where like I don't want to say I'm good at it because like it's stereotypically like
Asian?
you're right, and like I don't want to like buy into the stereotype, but I actually am decent.
Yeah, he
I'm
was
pretty good.
he was out. We were playing. We just got the ping pong table, and this guy was holding the paddle in all
Like
kinds of weird
chopsticks.
ways. And I
Put
was
a lot
like,
of spin on the
if he's
ball.
holding it that way, then yeah, he must be good.
If anybody wants
What's
to
the
come to our
bet?
office and challenge me to a
What's
game
the
of
bet?
ping pong,
$1,000 if someone beats you?
Oh, that's a big
2021?
number.
Yeah, 2021.
give him
2021.
a raise.
Give
I
him a
don't know.
raise.
We'll do something.
Raise it to raise it.
We'll do
There
something.
you go.
Right. Where are you guys from originally? So our office is in Warrenville, Illinois. We're all kind of from the Illinois area.
Where are you originally though? Where were you
originally?
born?
Well, that's kind of
North
no, I'm
Korea?
from South Korea. Yeah.
What part
Korea.
of South Korea?
Seoul. Yeah, the capital. Which like half the country lives in Seoul. So you know what I mean? It's kind of crazy. All right, guys. Thank you so much. Have a great weekend. I'll see you guys next Friday.
See you guys.
Joel will probably be here again. Which
Go check
I
out the
like-
Scrambled Life.
Yeah.
Yes.
We'll
See you
see what
guys.
new news we have.
See ya.